Hello and welcome to another update video about oil. So I just want to show you the expected wave count that we've got here. So there are two scenarios that I'm still observing that we talked about in the previous video as well. We might get a bit more clarity now, yeah, with the latest developments here. So we have, let me introduce to you again the higher level wave count. My understanding is that we're currently coming down in a wave 2 correction. It's a WXY pattern. There's also another idea I'm currently looking at. It wouldn't change anything, it just would clean up the chart a bit because this wave Y has become quite long. But don't bother about that, don't worry about that. You know, I might make a few changes here to the higher level wave count, but it doesn't really make a difference to what happens here and also what happens on the in the chart. So it's not a count change that I need to do because the chart does something different. It's more like just to tidy it up and to keep it all likely and correct. Now then, in this Y wave we moved down in an A wave, we moved up in a B wave, and are now coming down in a C wave. The C wave would be a 5-wave move, which already indicates to you that we should get some more downside here. That is still my primary expectation. In the wave C, it looks to me that we have completed already a wave 1. We might have completed now the wave 2, and we are heading down in a third wave next. There will be a fourth and a fifth, and we might end somewhere below $50 or in the region between 40 and 55 maybe. I'll be able to specify that a bit further as we get closer. The idea was that basically there are two scenarios. The first scenario is that the wave 1 came down here, we moved up in an A wave, came down in B, and are going to move up in C next. That's possible still. That is still possible as long as we don't break below the previous low at $77.60. Going below that would make this idea very unlikely. The other scenario, which if I remember correctly, I talked to you about that I would prefer this based on the latest impulsive move in the last video, but I'm not entirely sure anymore. I certainly prefer it now. And the other scenario would be that we came down in a wave 1. This was already the wave 2. And we are now moving down in a 1, move up in a 2. There'll be a 3, a 4, and a 5. And that's how we would now move down further. Reason why I prefer this, it would basically mean that the wave 2 finished here. Yeah? And that this was an ABC pattern, which actually works out quite nicely. So let me take the lower level wave count out, because then you would have your A wave here, your B wave here, and then a C wave ending diagonal. Oh, sorry, it's here, ending diagonal, and then we're coming down now in a 1. There would be a 2 now. And the thing is why I prefer this is because the move down was quite impulsive, and the move up is looking quite corrective. Yeah, so I wouldn't be surprised if we run into resistance now, which would be between the 50% fib retracement and the 78.6. So ideally we push a little bit higher. Ideally we push into the region between 82.21 to 84.88 before we find serious resistance, and then we could come down a third wave. But if we get above the 84.88 level, that would obviously be sort of a level where I would say, okay, it's very unlikely a wave 2 gets above that. Then we have to expect a higher C wave. So basically then I would say, okay, wave 2 has moved up so strongly now, even though it's not invalidated, this scenario down, it's now shifting, probabilities are shifting more towards a higher C wave here and the larger ABC to finish off the wave 2, possibly at the end of the, at the descending trend line of the channel, maybe even a little bit higher. And for that, I've got these two resistance areas on the chart still, which go all the way up to around about $92. So that's what I'm observing at the moment. It's at the moment, in my opinion, not very clear which of these, but I would prefer the direct move down, purely looking at price action and how the movement to the upside is currently occurring. And the chart is certainly still quite weak, and there's still a lot of downside pressure generally here. So I'm still looking at higher, lower anyway, for oil. So I don't think the overall bear market is in. Again, it could technically be in because we've obviously reached the long-term support area, the long-term trend reversal area, which is relevant for this higher degree wave 2. But the medium-term and the short-term wave counts just don't support it yet. And therefore my view is still lower. Okay, and that's my update about oil. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.